Hey, it's Mike with PriceActionTradingSystem.com, and it is Tuesday. It's March 23rd. This will be our chart lesson for today. And in the end, this was a range day. We really traded inside the overnight highs and lows right into the 2 o'clock period. Of course, we continue to sell off on this channel after 2 o'clock. But I would still characterize as your trading day as mostly being a range day. And we really had an upward bias here until right here. When we made this lower high and sold off and made a lower low, it was pretty obvious then we were going lower. You had to kind of suspect it when we turned down right here, but when we started working higher again, you can still see that we're making higher lows up through here. We made a couple of higher highs and then higher lows, but this is still two legs down. You had two legs up and then really just one leg down, and then you had another leg up. This was a retest of this original channel here when we went higher here, and then we never made a higher high after that. So prices, there was still a lot of buying coming in, but they were slowly losing momentum until the buyers give up, and then suddenly you get this sell-off. That's generally what happened in a nutshell, is that the buyers were strong, but they're losing momentum here. And really up to about right here, I was still looking for prices to go higher. Possible. There's two possibilities. There's the measured leg from here, which is this, and we didn't quite make that one. But then you also got this measured leg, and when we looked at, we didn't even come close to that one. So that tells you if we don't get up there and prices turn down, we're probably going to get a pretty big move lower. And you can see that's exactly what happened. Prices sold off and continued lower here. So no surprises there when we couldn't make that higher high. But you really had to play this as an uptrend until probably here, and definitely right here, it was obvious. So I want to get those out of the way just to clear the chart up some. But most of the day was just spent going sideways here with a little bit of an upward bias until we get right in here. There's a couple of shorts in here. We'll talk about them. But most of your shorts came a little later in the day. Let me back on out. We'll go through the trades. Make this big enough. Also, real quickly before we get started on the trades, I wanted to say I don't want this to feel like musical chairs for you guys and gals, but I'm going back to marking the trades the way I originally did. A few people had asked me, had complained that, or I don't know if they complained, but they felt like that some of the more aggressive trades should have been marked green when I was marking them blue, especially like reversals and things like that. But the majority, I had a lot of complaints because I changed it. Many more complaints about me changing it than what we originally had. So my opinion was it was better to go back the way I originally did it, and most of the people agreed with me. So that's what I'm going to do. Sometimes I'd like to make everybody happy, but you just can't make everybody happy. So you try to find a happy medium there. And I think the best way to handle this is just to mark the trades the way I always have. And that way nobody's confused. I'm just going to keep doing it the way I've always done it. So if I think it's aggressive, I'll mark it green. And the problem is like right here, this is a reversal pattern. And that's a little more advanced, but it's not really that aggressive if you're an advanced trader. So that's the sticky point. For newbies, that's probably a very tough trade that you would think was aggressive. But when you can read this chart and you understand what's going on, it's not so aggressive. It's a very good opportunity is what it is. And I do tell new traders on reversals, ignore them. Ignore failed second entries and reversals and stick to the basics when you're new. Because trying to learn them both at the same time is very confusing, and you're not going to be a good enough chart reader. I can tell you that right up front without even knowing who you are. If you're new to this and you're not experienced chart reader, then you don't need to deal with reversals and failures. Just stick to the basics. Trade off your key entry points using second entries, and in the ranges, trade off the support and the resistance, and stick to that. Don't veer from that. Learn the basics, because once you get those down and they make clear sense, the failures and the reversals will be very obvious to you. So, but until then, it's tough. It's tough sledding. So, anyway, enough about that. Let's get to the trades. Notice this first trade is a reversal. This is not really a super aggressive trade. It's just an advanced trade. Everything here is very clear. Notice you got a channel working down. It was really like a spiking channel, but you could tell that it's two-tiered. Either way, you get the break, a move to a new low, and then look how you get this second entry short. It fails and how it pulls back to the end. That's perfect price action. I'm going to take that entry most times when I see a channel like this play out. And if you take that trade, you get a good trade right out of the gate, and before 8 o'clock, you might have already met your target. So, yeah, that's an advanced trade, and it's going to be hard for a newbie to see it, but I don't consider that really aggressive. It's very straightforward price action. So hopefully that's clear. And so for that reason, I'm going to mark it blue. If you're a newbie, that's more advanced, and you need to stay away from it. So make sure that's clear. But we're working up. There's a higher low here, but by this time, this is a little congestive. You got 3 bars stacked up. 2 of them have tiny bodies. You're right near these highs, so I'm not crazy about entering that higher low. There is a second entry that triggers right here too, but that's an inside bar. I just don't like it. So I think you had to wait. But if you just wait a minute, right after 8 o'clock, you get a second entry long right here. Again, it's a little close to the highs, so for that reason I marked it green. But then you get another failure here. This is basically a double bottom. This might even be a tick lower, but it's at least a double bottom, so you can count that as a new low. First entry, second entry. And so for that reason I like that one. It's probably going to trap people. And you can see when it broke higher how it rockets up. That shows you get instant feedback on traps. And at that point, this was the key entry point too, so that's another reason I like both of those, because they are at the key entry point. This one is aggressive because you're going long into the highs. There's a good chance it comes up here and it runs back and stops you out and then goes up. But that is a key entry point, because at that point, this was just a spiking channel. I wasn't looking at this being a two-tiered channel until we came back here. And even then, there's a possibility that it's just a spiking channel, and this is a break and 2 legs up, and we got a reversal. So, and in the end, that might be the way it was, but no, we still got the move down here and a new high before we sold off. So, but this is a trend on its own, and you get a close outside it and a new low and a reversal. So, there's a lot of really good, perfect price action going on today. So, anyway, we move up here and then we start working sideways, and maybe we got a break of this spiking channel, and this midline is really the trend line. But either way, you're working sideways, and you get a multi-test off these lows, and you finally get a nice signal bar. And it is a first entry, second entry, although when you're going sideways, especially when it starts to get tight like this, we don't care too much about second entries because you can get chopped up. But it looked like this was going to be the key entry point as well. So for that reason, I like this trade. And it's a little bit aggressive though, because it is congestive and you don't have a whole lot of room to the highs. And then you also had the little inside bar that didn't break higher. So it's starting to, it's really looking congestive across there. So for that reason, that one's green. You're better off to wait on a higher low and a better signal bar, and you never really get it. And you just never really get another entry up through here. This one comes back to the trend line, and you could look at that as a failure as well, but it's congestive right there, and you got to go long right into the highs, and you're way away from the EMA. And you just don't enter. I see a lot of questions in the forum about trades, and they're going long way up here. Once you start to get away from this EMA, especially the longer you've been away, you can't go long away from it. And when you're way down here, you can't go short away from the EMA. And the reason being is because the EMA is like a magnet. Prices are going to pull back, and the longer it stays away, the more the odds get that it's going to snap back to that EMA. And you see it happen right here and then right here. And so when you start to get way away from this EMA, you just can't enter short because there's too big a chance you're going to get trapped and it's going to snap back to the EMA. Remember, this EMA is like a magnet. When prices are away from it, it pulls them back to it. And when the prices come back to it, they repel it and push it away again. And the only time that doesn't happen is at the places like right in here where you get the point of deflection where we're going to change. And so here it still gets a little resistance like it's trying to push it away, but the bind's too strong and it pushes on through. Now you want to watch it come back. And notice how all the way up through here, you're just so far away, it's not worth risking because just in a minute it comes back and then it reverses, gets back above it, and now it's obvious we're kind of going sideways. When prices start going above and below, above and below, that's a good sign we're going sideways. So anyway, I hope that's clear. But we finally sell off. It's tempting to go short here, but that looks a little congestive, and there's a good chance you might break lower and then run up to make a new high. So I don't think that's a wise entry. Turns out to be a great move, but you don't know that up front. So, but notice we're coming down. You get a close outside, and you get a move to a new low. And somebody asked me, they took this trade and they asked if they got lucky. They felt like after the fact they got lucky. But that is no doubt that's an aggressive trade. But if you're reading this right, look, you got a channel working down, you got a close outside and a move to a new low, and look how far away you are from the EMA. The better trade is to wait on a higher low and hope you're still way away with a good signal bar. But if you want to be aggressive, these trades often will be important lows, and you can see this was definitely an important low. Look how far prices moved. So you might catch a runner on these. I don't know if you would have this time or not, but anyway, a lot of times you do. And I took a trade that we're going to get to here in a little bit that's very similar to this, and I got like a 7 or 8 point runner off of it. And with 5 contracts, that was something like 35 points. Those kind of runners pay off, so sometimes it's worth it. But anyway, you get a higher low here. This bar is it's just barely doable, in my opinion. If it had been 1 tick lower, it would have been too neutral. But I believe you're closing in the upper 1/3 here, so I think it qualifies. We're probably coming back to the EMA. You got 1 leg up, so you'll probably get that second leg up, and we might keep going. So, of course, we do get the second leg up, and then this was a second entry short, and a couple of people got trapped here. First of all, you got 1, 2, 3 bars stacked in a row, and 2 of them have very tiny, almost no bodies. So when you get that third one, even though that's a second entry short after a big leg down, there's a good chance that we could make another leg like that. But you want to see it get established. I'd be very leery of entering there because this is what happens. You get trapped. The smart traders are all getting long here, and once we push on through there, they see what's happening and they're going higher with it. So it's a shame we didn't get another chance to enter this on the way up, but you just don't get a good entry. And we don't chase trades. And that's why we don't have so many losers, because we don't chase trades. If you start chasing these trades, yeah, it'll work sometimes like this and you'll catch a big move, but more times than not, you'll try to chase a trade like this, and this is what happens to you. You get, it goes just back to the EMA and then sells off, or you start chasing it down here, and next thing you know, it bounces and it runs down here and stops you out. And so just don't chase trades. I've already explained why you don't want to enter way away from the EMA in the direction that's going away from the EMA. Don't enter like that. So we run up here, we make a double top, then you get a little trap, and you get a lower high here. This looks a lot like this trade right here. It's a repeat pattern. And if you notice that, you may take that trade. I think you're better off to wait for the reversal that doesn't come till here. There's your failed second entry long, your reversal. I like entering there. You clearly got 2 legs down now, and it's turning down again. So I'd treat that like a failure. I like that trade. But if you notice the repeat pattern, you may take that trade. Of course, you get the break, a new low, and you actually get two legs down here. There's a leg down, there's a hidden second entry here. This is the trade I took, and it's posted here on YouTube. It's posted on the site. If you want to watch it, I took this trade, and I did catch a runner, and I exited maybe a tick or two from the very high here, and I came within one tick of getting stopped out at break even on my runner. That's the way it goes. Sometimes you get lucky, sometimes you don't. Somebody asked how I knew we were going higher here. You don't know you're going higher. I explained it in the video. All I was expecting was a scalp out of this to ride this back to the EMA. But I'm hoping that if I'm reading it right, we're probably going back to try to make a new high, which is what happened in the end. And I really don't know if this is two-tiered or not like that. Obviously, I really think this is an overshoot. So I think this was it. We overshot it and turned back down. So that's what I think really happened there in the end, because we never even tried to make a new high on that. So to me, I guess we did end up trying to make a new high, but it came so late I wouldn't even include it in this. I just believe that this is an overshoot. So this was a nice trade. It was a $2,500 trade. And is this one aggressive? Yes, it's a little bit aggressive. And somebody asked me about congestion. There are some bars going sideways right there, but you don't have your small bar with no body. So even though we're kind of going sideways there, there's a reason, and that's because there's support there, and the EMA's pulling back at it, so it's probably going to snap back. So there's no rule that really says you can't enter in congestion. It's just that most traders have failures when they enter in congestion. So I tell people, don't enter in congestion unless you understand what prices are doing. And even then, a lot of times prices will push through and pull back, but this was not congestion. You can see they never really pulled back. They just kept going. So that allowed me to catch a runner on it as well. We just found support here. Bottom line, we got the trend channel working down. You got a break and a couple of legs to a new low. There's a hidden second entry. Notice that high, and then it tries to go higher. If you went to a slightly larger or smaller chart, you'd see probably clear second entry long right there. So, and notice too, if you watch the trade, the live trade, if you watch the video on it, I did not enter on the engulfing bar. It was very tempting. It broke lower and turned and started going up, and I wanted to enter there, but I waited for this bar to close, and I put my buy stop one tick above it. And the reason is because we did have a little bit of overlap. I wanted to see this bar close, and I wanted to see it close bullish before I was going to take this trade. But you can clearly see how bullish that bar is. It actually opened down here, broke lower, and traded all the way down. And before it closed, it had traded all the way up out the other side of this bar and closed almost on its very high. That's a very bullish bar, and it takes a lot of buying. So it shows that the market's probably going to reverse here, even if only temporary. So we run up here, then we drop down, and we move up, and we just start going sideways. No entries in here. You get a failed breakout, and then one more push higher. Notice I'd count that as a double bottom. That looks like a second entry, but really you measure how wide this is and look for a measured move. We got a perfect measured move with that little failed break higher, and there's two legs up there. So I like going short. This actually broke higher and turned down. I like going short on the engulfing bar. You could wait for it to close, although it's really close to the EMA, but because it's a sideways action, I don't care so much about the EMA because that's just the way prices do. They go back and forth through the EMA on sideways action. So it's not as critical. But I like that trade. That's really bearish reversal after a measured move up. So if we push on through, we'll probably come back down here. Then we fell out this side, but you don't get a setup. There is a failed second entry short that does somewhat confirm that trend line, but you got to go long right into the EMA, right into the high of the original range. I'm just not crazy about it. You do work on up, and then notice what happens. You push down, you get a first entry, long, you shoot right back through the EMA and you get a second entry long, and this actually breaks higher, turns down. That's a failure when it broke right below that bar. So you could go ahead and enter there on a sell stop on the engulfing bar by entering one tick below that. But I think most people are better to wait on the bar to close and make sure it closes bearish, which it does. So if we break below that, just go with it. And if you catch that, maybe you get a runner on this one. Look at it go. But even if you miss that, a few minutes later, you get a first entry, second entry, right off that same key entry point. Fairly bearish bar, boom. There's actually another failure right here, but with all those matching lows, I don't like that one because this is what happens. It breaks out of that little range. This is basically a range right here in the end. And you see this little breakout. I don't like going long. It's too early to go long though. So we just run up and then we get in another range here. And again, I don't see anything I really like. There's a nice bullish bar here, but not much room. But then suddenly notice you get a first entry, second entry, and a little small, relatively small bar right off a possible key entry, although you may not have had that key entry. You're just playing this range, and so I like that entry. And then we come down here and you get a lower high that actually closes outside, so and it does confirm that trend, little short-term trend line. So you may take it. It's a little aggressive, but I still like it because we traded down into this, so there's another chance of a measured leg here. And you can see we went a little bit further than that at 2 o'clock before it bounced. But I like that. Then you get a first entry, second entry, and this is another engulfing bar. It breaks higher, fails, and turns down. I don't know if I'd wait all the way down here to go short, which you could, but it's clearly 2 legs back to the EMA, but it does look a little sideways too. So if you entered on the engulfing bar, you got a little better chance. It took a little minute or so for it to work on down, but it does take off. So I went back and forth whether to make that one green or not, but it's 2 legs back to the EMA when you're expecting prices to make a new low there, and maybe even another leg down like this leg, and the original measured leg's way down here, but I would measure this leg too. And so your measured leg's way down here, and you got a lot of room. So, and that took us into the 2 o'clock hour. There's nothing else here I like. It's just too late in the day and you're getting too far away from the EMA there. So plenty of good trades today. This has gone a little longer than I wanted. We're at 23 minutes here, so I'm probably not going to beat around the bush, but hopefully you had a good trading day. And if you didn't get a chance to see the live trade I took and recorded, be sure to watch it. It was this trade right here. And it is a little aggressive too, and I clarify that in the video. So it's a little, or I'd call it more advanced, but there's some reasons to consider an aggressive trade as well. But I liked it. And you know, when you're trying to record a trade to show, generally, if I like the trade and I would have taken it myself, I'm just going to record it and put it up, and I'll explain if it's a little aggressive or if I think it's more advanced or whatever, which I did in that video. So anyway, hope you enjoyed it. Hope you had a good trading day today. Hope this chart lesson was helpful for you, but I'm going to wrap it up, and we'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.